What's going on, guys? It's Kyle. Welcome to the Stock Goat YouTube channel. In today's video, we are going to be covering the Sofi stock, and this video is extremely important, and I want everybody to take this video seriously. Be sure to smash the like button. Let's try and get this video to 1,500 likes for the YouTube algorithm. We need as many Sofi investors to see this video as possible. And be sure to drop a comment. I'm going to be commenting back to as many people as I can. And once again, guys, if you search the Sofi stock at the top of YouTube right now, Stock Goat is the top channel, the #1 creator covering the Sofi stock. So be sure to subscribe to the channel. We are going to be keeping you updated daily. Let's try and get the channel past 15,000 subscribers. And just to show you guys a little bit of my YouTube analytics, we have 59% of viewers subscribe to the channel. 40% of you guys are still not subscribed. So let's get this channel trending so more and more people can learn about the Sofi stock. You're really going to love this video. It is very important. This is a weekend video, but we know that Sofi had a little bit of a red day, giving up about, 5 to 10% of its gains that it got on that earnings report. So we still held over 85% of the gains on the earnings report, which was extremely great. Market cap should be around 7.5 billion right now. So what I want to take a look at, guys, is something that is very, very concerning to me, okay? We know that Sofi has a lot of coverage, and you rarely see this in a SPAC. We could see that there is over 12 analysts covering the Sofi stock. After earnings, we had 2 upgrades. Only 2 analysts came out and, made an upgrade or an announcement on the stock. So that still gives us 10 analysts that are nowhere to be found. It's very, very intriguing to me. The only 2 analysts that came out and covered the stock immediately after earnings. This is very, very interesting. You can see I made an announcement on my Twitter. This is getting a lot of, comments and likes right now. I said 0 upgrades after earnings from the 3 legacy banks: Morgan Stanley, Bank of America, and Citibank, who all have cut their price targets over 4 times each, the past 6 months. What does that tell you? And I'll read, what some people are saying right now, okay? They are trying to get Anthony Noto to sell Sofi at a cheaper price. I think this company is worth much more, growing a fintech faster than the banks. Just keep buying shares. The manipulation is strong with this one. Big banks are scared when we hit 10 million members. The banks won't able to keep the stock down. Hostile approach buys it. Definitely feels coordinated effort. I mean, it's like Netflix taking over Blockbuster. So as you guys can see, a lot of people are concerned that there is some manipulation going on. Big legacy banks trying to take over control. But guys, my tweet was actually wrong. I said there was 3 legacy banks. There's actually 4, okay? I missed out on Goldman Sachs. So as you guys can see, these are the red X's for legacy banks. That is literally 4 out of the 12 analysts, okay? But this is interesting. See the 2 green marks? These are, the upgrades we got. Yeah, they were small upgrades. One was a 50-cent, one was $1 from Mizuho and Credit Suisse. But look at Credit Suisse and Mizuho. Credit Suisse is based in Switzerland, and Mizuho is based in Japan. So these are, non-US related investment banks, investment firms, okay? So that's very interesting to me, that the 2 first upgrades that we get are not even from American companies, okay? That's a little bit interesting, okay? So these other 10 companies are all American, okay? The banks and investment firms, Jefferies, Oppenheimer, Rosenblatt, Wedbush, all of these are American. So why are the first 2 upgrades coming directly out of America? That's just something to think about, okay? So we actually have 4 legacy banks right now covering this stock. If you go over to this global ranking, largest banks and bank holding companies by market cap, guys, I mean, if we just scroll down, I mean, we know it just goes on and on. I believe there's over, 500 just in the US. But if we just get into the higher range, the top 15, top 20, just take a look at the 4 analysts covering our stock right now. Citigroup is the 17th largest bank in the world. We also have Goldman Sachs, the 16th largest. We also have Morgan Stanley, which is the 6th largest, and Bank of America, the 2nd largest. So 4 of the top 17 largest banks, in the world are covering the stock right now. So 4 of the largest banks in America are covering the Sofi stock right now. So it is going to be extremely hard, because I know they have small investments in this stock. If we look at their, share prices, 30, 40, 50, 60 million dollars. But is that just a diversion to, have coverage on the stock? Think about it. A $60 million investment may seem to be a lot, coming from a big bank. But think about it, guys. There's so much more money at stake. We're talking 10, 20, 30, 40, 50 billion dollars of potential customer deposits, millions and millions of users. The larger SoFi's market cap gets, the stronger the company can get with hiring, taking a little bit of that market cap off the table with some dilution, more money to use for expenses and stuff like that. So the larger that market cap grows right here, the stronger and stronger your company can get. And I truly believe those four legacy banks, they have it out for SoFi right now. That's why these guys are nowhere to be found. I mean, I'm surprised nobody's came out with a $10 price target. I mean, think about it, guys. I believe securities fraud could be happening right now. I mean, think about how simple this is. You have one of these analysts, inside of their headquarters, a CEO walks by and he's like, yeah, I'm covering the SoFi, earnings right now. And the CEO looks at him and goes, okay, just keep covering them. You see that, guys? What I just did? Just keep covering them. Securities fraud right there. He's basically saying, keep the stock at low price targets. Don't pump up the stock. All these guys are probably on, $100, $200, $3,000 salaries. I mean, think about how easily they could get a bonus, stock RSU, compensation by just cutting these price targets and keeping them down. You could get bonuses out the wazoo. I just have to tell you guys, these four red X's, I'm very concerned with these people being allowed to cover the SoFi stock, which is a bank now. SoFi is a bank with their bank charter, and it's just, I believe, they are going to keep their price targets at a very minimal of upgrades if they have to do an upgrade. Even if SoFi stock is blowing out these earnings, I mean, they could be doing, 50-cent upgrades, per freaking earnings report for the next 5 years for all we know. So I just don't know how this is legal with the SEC. There's nothing we could really do about it. I just don't want you guys as SoFi investors to be blind sheep. And understand, guys, if these analysts are, not actually giving credit where credit is due with these SoFi price targets, it's going to allow the stock to be manipulated because short sellers will have more control of the stock being, priced at lower levels, price target upgrades, bad headlines. It's going to allow the short sellers to have more power. And that's exactly what Tesla went through for, over 5 years plus. And Elon Musk explains exactly what happened to him in the beginning stages of Tesla, when they were an unprofitable company, just like SoFi. So just listen to this. As you guys can see, this video got almost 14,000 views.
It's difficult to put yourself in the position at the time. Tesla was under the most relentless short seller attack in the history of the stock market. There's something called short and distort, where the barrage of negativity that Tesla was experiencing from short sellers on Wall Street was beyond all belief. Tesla was the most shorted stock in the history of stock markets. Yeah. This is saying something. So, this was affecting our ability to hire people. It was affecting our ability to sell cars. It was terrible.
So you hear what he said. It was affecting our ability to hire people because your market cap is just teeter-tottering at such low levels. You're not able to use some of that market cap, take some money off the table. There's a lot of things you can do with a massive market cap. You can, dilute, share offering, share buybacks. There's all types of different stuff. So the lower your market cap is, the more troubles you can have at growing your company, okay? So that's something to think about that these analysts could potentially be doing right now, trying to look for a buyout on SoFi, trying to buy SoFi for pennies on the dollars. And I believe that's a big reason why you see none of these U.S. analysts come out and give any price targets. The only two upgrades we have were from two companies in Japan and Switzerland, okay? So be sure to drop a comment, guys. What do you think's going on? Why are these legacy banks allowed so much control over these fintechs? What do you think about their price targets? Why are they not coming out with upgrades? What is going on right now? Because we literally have only 2 analysts out of the 12 making any price target adjustments. Is there securities fraud being committed? Holding the stock down, not giving a fair estimate, writing BS, short articles. I just believe, it is very, very tough for SoFi to make it out of these lower levels right now because they are competing with these big banks. And Anthony Noto says that all the time, our deposits are growing, our user base is growing. Do you think these legacy banks want to hear that type of stuff? Do you think they just want them to allow SoFi to grow rapidly as fast as they can? They're making it extremely hard, I believe. And I think we need to try and do something about it, make some complaints to the SEC about, banks being able to cover banks at these levels. There's just a lot to think about. and we have to get on to the second part of the video, guys. We are less than 5 days away from that CPI report, August 10th. Remember, guys, we could potentially get some good news on student loans if inflation comes down dramatically, because Biden will know that he's going to have even more backlash of extending student loans, because that's going to put that fuel on that fire of inflation, just bringing it back up higher. So guys, there's a possibility we may get some wiggle room if inflation drops on this CPI report. Okay, hopefully we're praying that it comes down dramatically. We know that gas prices have been falling the past 6 weeks or something like that. So that could be a tide changing. Who knows? Remember, guys, this is deeply correlated with student loans. This bad inflation gives Biden a reason to extend out student loans, saying that the people are having struggles and stuff like that. So just remember, CPI is the big headline coming up this week. If you made it to the end of the video, I want to say I really do appreciate it. I enjoyed doing this video for you. I just want to make sure everybody is aware of who our analysts are covering the SoFi stock. As of right now, we have 12 analysts covering the stock, and only 2 analysts have come out, given us a small upgrade. Those analyst investment firms are not from America. We have Japan and a Switzerland with Mizuho and also Credit Suisse. So the other 10, which include 4 of the largest banks in America, are nowhere to be found. And those banks that are covering our stock have also cut SoFi's price target 4 to 5 times over the past half a year. So it's just very, very strange to me, guys. I believe even though these guys have small holdings inside of the stock, I believe there is more at risk of SoFi's market cap absolutely taking off. This could accelerate SoFi's hiring process, allowing them to also use more dollars for marketing expenses, RSUs, stock-based compensation, allowing the company to grow and invest even quicker. There's a lot that goes behind these price targets. I just believe we need to do something about these legacy banks being allowed to cover the new and upcoming fintech banks. This is very concerning to me. I believe there could be some securities fraud happening, because these price targets and stuff not coming out, just cutting all year, are not necessarily correlating to what SoFi has done. When you look at all their earnings reports, they have beat 9 months out of 9 months in a row, 3 earnings reports. So something to think about. Be sure to drop a comment, smash the like button. Don't forget to subscribe to the channel if you're not already subscribed. Once again, my name is Kyle. Hope you have a great day.